Hi, this is Stuart Cooper with your mortgage market update for August 31st, 2022, the very last day of August. And let's just say August was an ugly month for interest rates. And we definitely saw a steady increase in rates throughout the month. So let's just jump into this. Today was no other day, just as bad as the other previous days. So we definitely have quite a sell off on the bond markets. And we're definitely going to be seeing the raise in interest rates over the next few days. So let's just jump into this real quickly. If I go to my indicator right here, my key levels, 10-year yield, you can see here it's far to the right as it can possibly get. So whenever it gets this far to the right, that just shows you that it's a very volatile market, and you should be taking the opportunity to lock in your interest rate and hope for the best, because things will probably get worse before they get better. So that's what that indicator is telling me. And sometimes it's been moving over to the green, but right now we're definitely in the red. And you can see here when I just look at if you look at mortgage-backed securities, you can see the 4.5% coupon is off by 13 basis points. You can see the Ginnie Mae's off, the 10-year Treasury. In fact, everything is off. And then if we go ahead and take a look at what interest rates are doing, or as far as the 10-year Treasury, we can see the volatility. So let me just open this up a little bit. All right, so let's just take a look at the 10-year Treasury the last 5 days. You can see today was really ugly. You can see the later part of the day, we definitely had a definite sell-off, and you can see it 1, 2, 3, 4, 3 big price corrections. And then we can actually go back to last month, and you can just see this rising graph is just basically shows you rising interest rates. So we're definitely in this channel of rising interest rates. The fact that we're at the 3.21 level, that's a really high level. That's kind of a volatility level. If I go further out, if I go 6 months, you can see we rarely ever get this high. So we're definitely in uncharted territories. This could really cause kind of a sell-off without really scaring anybody. But this has the potential to be a lot worse before it gets better, just because we're at these new high levels. Let me get rid of this chart. All right, so now let's take a look at the economic calendar. What is really worrisome for me, it had to be on Friday, and it's Friday. There's two things that are coming out. The non-farm payrolls, it's anticipated to be at 300,000, and then the unemployment rate at 3.5. But the non-farm payrolls is what I have a lot of concern about, because right now the Federal Reserve is doing everything they can to get inflation under control, and that's why we're seeing the market kind of selling off the last few days. If you've been watching the stock market, it's been off, quite a bit every day, and the reason for it is because Chairman Powell said that basically we're going to be raising interest rates and raising them as much as we need to get the market under control, and that caused the market to a frenzy because they thought they were going to start easing up, but they can't ease up because inflation is not under control. I think it was like 100. It moved a little bit, improved a little teeny bit, and that had a lot to do with the fuel prices. So inflation is still there, and it's going to be stubborn. So they're going to have to do a lot more raising of interest rates to get that under control. So that's why we're seeing the sell-off. So, but getting back to non-farm payrolls, here's what's critical. So the non-farm payrolls, they're anticipating 300,000. All right, if they hit that mark, nothing will happen. If for us to get a bounce in rates, where rates would improve, we're going to have to see that number probably come down to about 150,000, because we have to see the economy cooling off before we see interest rates start to improve, and we're just not seeing it. I mean, we're definitely seeing things soften, but we're not seeing the dramatic effect that the Fed was anticipating. So the market is very stubborn. So that's why rates are going up right now. That's why there's a lot of volatility in the interest rates, and it has to do with inflation, and the economy is definitely softening up. So just want to kind of point that out. As far as interest rates are concerned, as far as like 30-year jumbos, loans that are not Fannie, Freddie Mac, the so-called jumbo loans, the best pricing I've seen right now is around 4.75, I believe, at like a 3/4 of a point cost. That's kind of where the market is, and that's with someone with 20% down, 720, 740 credit score. If it's a conforming loan, Fannie Mae, Freddie Mac type loan, the rates are definitely higher. You're definitely in the mid fives probably right now, maybe even a little bit higher than that. Maybe 5.625, 5.75 would be an educated guess. So that's where the rates are. So believe it or not, jumbo money is actually considerably cheaper than the Fannie, Freddie Mac type of money that's out there, the conforming loans. So it's kind of interesting when that happens, but it's been like that for quite a while, where the jumbo money is actually cheaper than the conforming money. With that said, let's just talk about what the housing market is doing as far as what I see in my neck of the woods, and I'm in Southern California. So what we're seeing is we're definitely seeing the market softening up a little bit. We're not seeing the multiple offers like we used to. We are seeing some properties with multiple offers. When I mean multiple offers, I mean 2 or 3, not like 10 or 20 like it was, 6 months ago, 8 months ago. So it's definitely cooling off. So there is some great opportunity out there. If you're really serious about looking for a home, there's a little bit better opportunity. You're not competing with as many buyers as you were, a few months ago. But like I said, the market is softening up a little bit. Maybe the market's maybe adjusted maybe about 1% or so for my area. But it is what it is. So if you like this information, please subscribe to my channel. I'd love you to follow my information and get really good, insightful information, because it's my goal to help you make educated, informed decisions when it comes to financing your next real estate transaction. All right. So with that said, I hope you guys have a great week. And of course, if you have any questions or comments, go ahead and post them in the comments section and I'll try to get back to you. All right. Thank you.